go. Great. Well, welcome everybody. Thank you so much for making time on a Thursday afternoon. I'm Rumanakhan. Most of you online know me, but the ones that don't, I'm a buyer's advocate, and I spent most of my time trying to find homes or development sites for developers. Now, why this webinar has come together is because of extended inquiries from my investor clients asking me, what can we do to get more than 3 to 4% rental yield from the traditional residential properties? I can't be bothered to maintain my property anymore. It's giving me too much headache. My tenants are, a nightmare, and my property is in a different state. In lockdown, I can't even go and sort it out. I mean, I personally invest money into developments, and I've in the process come across amazing experts in the field that provide more than the 3 to 4% rental yield, and we are all about finding out today how that happens and how the experts do that. So I'm very fortunate to be working alongside our guest speakers today. So I'll be introducing everybody initially, and then we'll dive into what they do more in detail one by one. So I'll be starting today with Remo Stander and his team. We've got CEO and Scott. Could you please unmute yourself? Maybe Remo starts first because it's the three of you, and introduce yourself.
Awesome. Way to put us in the spotlight, eh? Cool. So I'm Remo Stander. I'm the development director here at RPA. I used to manage or general manage a property development company on the Sunshine Coast for about 5 years, and extensively got involved in property development and obviously different types of property development projects. So ranging from townhouse developments to light industrial to just land subs, ranging up to about $7 to $8 million per project. And we've done probably in the last 5 years, probably did about 20 odd projects for them. And then, late 2019, early 2020, I jumped on board and partnered with Scotty, and we've now got a few active projects on board. We'll discuss one with you guys today, but I'll hand it over to CEO and Scotty to fill you in on a little bit more.
Yeah, awesome. And Rumana, did you want us to take off from here and sharing a little bit more about what we do, or is it just a quick introduction for now?
Yeah, it's a quick introduction. You'll be getting your chance to present and talk more in depth.
Cool. Awesome. So, hey guys, my name is Stuart. I'm a sales and marketing consultant and also one of the property consultants at Real Property Advice. And I've partnered with Remo and Scotty. I'd love to share a little bit more shortly. And Scotty, maybe you can share a little bit about you as well.
Okay. Yeah, thanks. And thanks for the invite, Rumana. G'day, I'm Scotty North, and I'm based right now in a bunker on the Sunshine Coast in the lovely, island of fortress we are in Australia at the moment. And I've been in the property space since about 2004, and been doing development for many years. I'm not going to dig too much into a whole bunch of guff on that, but open for some questions as we go forward, and pretty keen to listen to everyone else presenting as well. So thanks for the invite, and talk to you soon.
No worries. Thank you so much for the intro. Okay. Stuart, can we unmute you?
Yeah, sure thing. Hey, how you going?
Good.
Can you hear me?
Yes, we can hear you.
Cool. Oh, good. So you just want me to a quick introduction, or so? Yeah, basically, I'm not sure. I haven't really given myself a title in terms of director or CEO or founder. But basically, myself and my dad have created a company called Super Cashflow Developments, where we specialize in property development, specifically developing rooming houses for investors. So, yeah, we won't go into too much detail with that as well, but more of a questions thing, I suppose.
Yeah, we'll dive more into detail later on. And
Awesome.
Then we've got Vaughan. Vaughan, do you want to unmute yourself?
Hi, Romana. Yeah, thank
Hi.
you for the invitation. Yeah, so I'm Vaughan. I'm coming from across the ditch here in New Zealand. That's probably why my connection might be a little bit weaker. And the idea is I'm over here, I'm a property consultant working with Williams Corporation. I'm a property investor, property developer, and entrepreneur in my own right. And so we over here in New Zealand, in Williams Corporation, we're coming up to be the second largest home builder in the country. I guess, yeah, my engagement with them is we have a lot of different products and a lot of things that are of interest for investors with high yields and solving the property crisis here in New Zealand. So I'm just proud to be working with them in my own fashion as a property developer, joining up with the Williams Corporation. So yeah, looking forward to some of your questions.
Perfect. Thank you so much, Vaughan. Our last guest speaker, she's actually not live here with us. She is based in Canada. So I'll be playing a pre-recorded video where she explains all about international investment right at the end. So what we'll do now is we'll be starting with, again, in the same order. So Remo and his team talking about how you guys do what you do, why commercial developments are quicker than residential, and how do you achieve these high yields. So I'll be passing it back on to your team, Remo, to give us your amazing insight.
Awesome. Well, hope you guys have got some time to sit around and listen. This will take me only about 2.5 hours to go through the reasons why light industrial is better than residential. Look, yeah, no, I'll try and make this as quick as possible. But us here at Real Property Advice, we typically try and, well, we don't just do light industrial. It's obviously our primal focus of what we do. It's more profitable. And it's obviously a lot quicker for us to get these projects developed. So we're in and out of a project typically within about 11 to 16 months. We typically sit on average at around 60% return on equity on the project. And obviously we split those profits with our clients 50-50. Sia, can you just run through the slides quick?
So,
I just want to...
Yeah, just as we get started, maybe give the viewers or the different members watching today as well just a couple of pointers on your background and maybe yourself as well, Scott.
Yeah, cool. So I actually moved to Australia in 2008 as a geophysical surveying engineer working for the second largest mining magnate in the world with about 52,000 employees. And I did that for a couple of years and started my own company in mining. And then I exited that. And then a couple of years after that, jumped into property development. And I've been successfully executing property projects since then. Yeah, so I don't want to go into too much detail, but it's, in my opinion, certainly probably the best way to manufacture, amazing profits through property. We actually had a discussion on this 2 days ago, live on Facebook. So, yeah, Scotty, do you want to just give a quick intro about yourself as well?
Yeah, sure. Back in 2003, 2004, I went hunting for high cash flow, and I found myself in the US market. We were one of the second odd people in terms of Aussie groups over in the US to be sourcing high cash flow properties over there for Aussie investors. And as you do end up having kids and what have you, and I got over the flights backwards and forwards and I couldn't make sense of the market. So I came back here and was just sourcing property, for Aussies in Aussie land. And yeah, so that's what led me to watch going into GFC, telling people not to buy because the yields were all skew-if, ending up with no work because you don't get work when you're a buyer's agent. You're telling people not to buy property because it's a crap time. And so we reinvented the business during GFC because we had plenty of time to do so, came out there much stronger and what have you, and focused a lot on the property cycles and the micro and macro cycles and the trends and what have you, and to see where we can best utilize someone's equity or cash in a market to supercharge their way forward. And that's what we do now. So that's the brief overview there.
Yeah, awesome, Scott. So Remo, maybe just give them a couple insights as to what projects you've done previously and locations as well with light industrial.
Yeah, so projects I've completed, well, I've done and completed today. Actually, you can see on screen here there's a few light industrial, there's some land subs there as well. We have done some townhouse developments, some duplex lots. Duplex lots is obviously the way that most people break into the market when they want to do some profitable projects on their own. But these are just some examples of some of the projects that myself, Scotty, and our team have completed in the past, and also a project that we're working on at the moment. Yeah, so light industrial, we typically try and aim for about 15 to 30 light industrial units on a project. And we obviously go in looking, and so we obviously go in, build and develop what the current market wants. So we don't just go in and look at what's most profitable. Profitable doesn't mean always that you're going to be able to sell at the end. So we look at what is in high demand in that current area, and we get the information through speaking with a lot of our agents and town planners and council in the area. So yeah, look, today I just want to, obviously on completion of our projects, we share the profits with our clients 50-50. So I'm just going to go and we'll chat a little bit about how we share and how we get to achieve that result of getting a 50-50 split to us and our clients on each of our projects. And obviously my team here, Scott and Sia, if you guys want to dive in and add to this, by all means, please feel free to do so.
Yeah, so we'll cover more on how to get 50% of the developers' profits, and that's what we'll be talking about today. We'll share a little bit about our joint venture structure, what type of security is involved within our projects, how we provide transparency. We'll also give you a little bit of a fees overview with depending on time that we have here. Scott, is there anything else you wanted to mention?
No, mate, no. Just let's get to the action.
Yeah, let's get to the action. Also, we'll be giving you guys a sneak peek on a project that we're launching, which we haven't yet shown our existing partners. So traditionally, our current joint venture partners get to see our projects before we release it. However, we've just got something come on board, and thanks to Romana inviting us today, we'll share that today with you. So we'll share with you again how to earn 50% of the developer's profit. Remo, maybe give them a recap of what's involved within our projects.
Yeah, so as I said before, so as you can see on the screen, we typically focus on light industrial and land subdivisions in high demand areas. The locations that we typically develop in is in New South Wales and Queensland. If you want to know more about those locations, we're happy to provide those information on completion of signing a joint venture partnership agreement with us. Our projects run for about 10 to 18 months. The average equity that we raise on a project is around 4.5 million. Could come down as low as about 1.8, but that's typically our range. The profit average on a project is about 60% plus. Our security is first and second mortgage security, and then our legal structure is in the frame of a joint venture agreement and a development funding agreement that we've now converted into one document. And then we obviously, for our structure, we use a unit trust and an independent trust account for our clients.
Yeah, so for those who aren't in property and may not be aware of what some of the terms mean, to break it down simply, for our joint venture partners who onboard with our projects, let's say they onboard with $100,000 in a term of 10 to 18 months, you're going to make 50% of the profit that we will average on the project. So, for example, if we make a 60% return on the project, we'll split that return 50-50. So 30% will go to our joint venture partners. So that's 30% on top of the 100, and we get the other 50%. We'll talk to you, and guys, if you have any questions, please drop it into the comments. We'll be happy to answer that within the presentation while we cover the structure and security as well. Scott, is there anything else you wanted to add to this?
No, mate, it's all good.
Cool. So, Remo, maybe cover the structure.
Yeah, cool. So you'll see here entity 1, entity 2. Entity 1 is where myself and Scott will sit. Also, the bank finance will sit in that entity. With entity 2, our joint venture partners will sit there as well as the mortgage. So the clients will have a confidence trust account set up, which we do on your behalf. And then obviously we also set up a unit trust for the clients within entity 2, and that's how your units are shared and allocated to you. The land is held within entity 1, just so you're aware. That's for security reasons. for us and for the rest of the joint venture partners. And then we also sign a development funding and a joint venture agreement between entity 1 and entity 2. I hope that makes sense. It's just, I'm mindful of time. I just want to make sure that we get through all the information.
Yeah.
But if anyone has got any questions around the structure, please jump in and ask the question now.
We have a question, but that's more about the timelines, Ramo. Like Andalip is asking how firm the timelines are in terms of completion.
Timelines, we typically aim for about 10 to 18, or 10 to 16 months, around there. The average residential project, I have not completed a residential project to date that was shorter than 2.5 years. And that typically comes to the amount of red tape and hoops you got to jump through with council to complete residential projects. With light industrial projects, a lot of our projects is done through CDC, so we don't have to go through a full DA. Your DA typically sits with council for about 2 to 3 months, and then you've got to do op work. So there's not look, it's still the same amount of work that we've got to do up front to get it lodged, but it doesn't sit with council for that for an extended period of time. The reason behind that, I'm not quite sure. It might just be that there's a lot less light industrial going on versus residential, and there's obviously not as much involved in getting a light industrial approved versus getting a residential approved. So yeah, it's just the timelines are much shorter with light industrial. We can typically, with a light industrial, if it's got DA on it already, you can complete it within about 7 to 8 months. We've only got about a 16-week build period. We typically go to market and start selling off the plan as soon as we lodge our DA. So we typically, in today's market especially, we're seeing a lot of our projects and a lot of our partners and our builders, their projects actually get 100% pre-sales even before they complete their project. So, so there's a question here saying that can foreign investors invest?
Rumana,
Yes.
Rumana, you have an answer to that.
Yes. So in terms of commercial construction, as a foreign investor, you have to be very wary in terms of stamp duty. So for commercial, there is no additional stamp duty, which can be up to 8% on top of the standard Australian stamp duty that you have to pay. So it's actually quite beneficial to consider commercial construction compared to residential.
Scott, maybe you can advise in regards to our structure on that as well, because that's true in terms of traditional purchasing and investing for commercial projects. But Scott, maybe do you have an insight for international investors regarding our structure?
Yeah, I don't have one answer fits all, because we always double check each client with independent advice for their situation. So the short answer I can give you is, yes, we have plenty of people who do not live in Australia who we've dealt with before. The longer answer is, I don't know exactly what that looks like for you, because I don't know your situation and we haven't talked to our immediate advisors on it. So hopefully, I'm not trying to be cagey. I'm just trying to be clear, and I don't like just giving false hope and false information. But yes, we have worked with people before, but no, I want to check with you personally before we move forward on anything.
Yes, and just to add on to that, every foreign investor will come from a different country, so it's highly advised that you seek, financial advice from your country's experts, as well as tax advice. There's so many other factors that you need to look after, and when investing in Australia in particular, it has to go through the FIRB application. Yes. So you have to actually seek a permission to purchase in Australia. So best to speak to a lawyer around that part as well. There's another question also is, it says, Andalip is asking, are profits shared on the completion of the project or after the project sold out?
Well, in our opinion, a project is only completed once it's sold. So the answer to that is profits are shared on completion of the project once it is sold, if that makes sense.
Yeah.
We typically, as I mentioned before, we're seeing a lot of developments get sold out prior to the project actually completing. In that instance, the profits will be shared with the clients on a 50-50 basis once the contracts have settled and the funds are in the account then. Because obviously you've got 100% pre-sales. We can't then start paying stuff out even though the project's not completed.
Yep, makes sense. Thank you. Thanks for that. Okay, I'll let you complete.
Awesome. So, Remo, I know you covered the structure. So, just for the viewers out there, is everyone familiar with these terms of security? So, first and second mortgage security. If you have any further questions on that, maybe we'll save that for another time because it's like a whole nother chapter.
The idea, CEO, is to give everyone a brief sort of insight, and then, for further detailed knowledge, we will arrange Zoom meetings or meetings with you guys if required.
Yeah. Beautiful.
Yeah. Is there any other insights, Remo, that you wanted to touch on regarding the structure?
No. Let's keep moving, mate. There's other people that need to speak as well, so I just want to be mindful of them.
Please.
Yeah, awesome. So let's touch on our current project. So this is a live project. Is that right, Remo? With the details, just before I show it, correct.
Yeah. Let me just share screen quick if I can.
Mm-hmm.
Okay, so I'll just run you guys through this quick. So this is a project
It's not sharing yet.
Is it not sharing? There we go. How's that? Is that better?
Mm-hmm.
That's better.
Okay, cool. So look, so this is a project that we've got on the Central Coast. I'm not going to go into too much detail on this project, but it's, as I term, a unicorn project. We've got a $2.6 million purchase price. We've got 11,900 square meters of land. We're only utilizing 49%, so 5,800 square meters. Our cost per square meter on the floor is 1,350 square meters. We're very conservative on our sale prices here at $3,000 a square meter Inc. GST. The current market on the Central Coast dictates, and I've got confirmation from our sales agents down there. He just sold 150 square meter units for $3,500 ex GST, and they are selling 400 to 800 square meter units for $3,000 ex GST. So these figures here are very conservative. We've got a $350,000 contingency in here. If it doesn't get used, that comes back into the project as a profit. That bumps our profit margin up to about 80%. So obviously if we go in and add $3,800 Inc. GST and $3,300 Inc. GST, our profit margin jumps up substantially. Again, we're very conservative with the figures that we run on our projects. So I don't want to give anybody any false hope and go, come and make, over 60% profit on.
Yeah, we have a question from Harry on these profits. So he's asking, what are the average net returns on projects from the last 2 years, say?
Yes, we're looking at about 60% on average. So about 30%, so 60% per annum. So we're looking at about 30% back to clients over a 12-month period.
That's the project returns, right? So you always relate it. We got to relate it back to the returns to the clients, which is what you're saying there, Remo, is half that. So we're looking at what, 30% odd.
Yeah.
Nice.
Correct,
I have a question on this part also. Is there a minimum or maximum number of investors you allow per project? And what is the minimum sort of amount that each investor has to bring on board? Do you regulate that?
The minimum amount that we get clients to transact with us on a project is 100,000. There's no maximum. The average amount that our clients are transacting with us at the moment is around 180 to 220,000. Only because some of our clients are putting in 150, some are putting in 100, and then some are putting in 300. So our average sits around that, 180 to 220.
Okay, perfect. Thank you. That was the presentation, Remo? Yeah.
There's not much more. I think just if anybody wants to get in touch and find out more about how they can transact with us on these projects, they can get in touch with CO. They can also jump on our website, which is www.propertyadvice.com.au, or they can contact CO on 0420 589 176.
I'll be sharing the details with anybody who wants to know more. Thank you so much, Remo, CEO, and Scott. That was great. I'm very mindful of time, so we'll be, unless there's any questions for the team, shall we jump to the next guest speaker today? No more questions? No? All good. All good. Beautiful. All right. We have Stuart, if you want to unmute yourself.
Hey guys, how you going?
Good.
That was it's going to be a tough one to follow, I think.
That's all right. We do different things. So
yeah, definitely. So yeah, where do you want to go from here? I haven't actually prepared anything, just so people watching know it was fairly short notice that I've been thrown onto this one, but I'm more than happy to talk.
Sure. So what we want to know is, how does rooming work? What does it actually, entail, and what can investors expect in terms of returns?
Yep. So effectively what I'm doing, just so people are clear again, is rooming house development, which is essentially, if you want to know what a rooming house is, it's basically multiple people living under the one building or in the one building. There's a lot of regulation around that, so I won't go into too much detail with that, but it's that's what we're doing. What was the next question there again, Romana? Sorry.
It's basically an all-round why rooming houses can be an investment option compared to standard residential investment, and what kind of yields we're looking at when we develop a rooming property.
Yep. So with what we're doing, well, the company name is Super Cashflow Developments, and I guess the reason why I'd want to invest in a rooming house versus a standard type of property is because of the differences in the cash flow. So with a lot of standard properties especially in Victoria, as far as I'm aware, you might be looking at maybe 3% rental yields, and that's your gross yield. With rooming houses, with a lot of the projects that we're currently doing with the new builds, we're looking at over 12-13% in terms of gross rental yields. So there's a massive difference there. So why would you want to do it? It's for the cash flow. In terms of like net income per annum, and this will of course vary on your loan to value ratios and interest rates and things like that. But if we're assuming a project where there is full cash injected, we'd be looking at close to a net income of $60,000 per annum, basically. So yeah, that's why we're doing. That's why I'd recommend this over a standard home, because it's a much better yield.
Okay, so does that work similar to Remo's team, where you've got several investors putting in the money for a particular project, or you build it, you construct it, and then it's for somebody to buy the whole project off you?
No, we're doing, I guess, start to finish with our clients. So we're basically working with them to determine what the best strategy would be, because there can be advantages to designing things certain ways. A lot of our current jobs at the moment are actually completely cash funded, so no leverage involved at all, or private funded. But there's some other projects at the moment where we're not building them a certain way. Without going into too much detail, there's a lot of what we're building is, while they are considered one dwelling, or it's one building technically speaking, we're doing it in a way where it presents as 9 studio apartments. So each apartment has their own courtyards, they have their own kitchenettes, they have their own en-suites and their own private living area. With some other projects that we're doing. Oh, sorry, you go.
Just on that, Stuart, Nomiki wants to know if rooming houses are like student accommodations in one house.
Well, student accommodation, that's another. I'm not actually fully across student accommodation, but that's another whole can of worms, where it's actually a lot more difficult to get like a registered student accommodation building. It is very similar though, where it is multiple people living in the one building. We actually have some rooming houses in certain areas, say Clayton, where it's very close to one of the biggest universities in Victoria, where they are renting out mainly to students, but it's not classed as student accommodation.
Okay.
So,
sorry, man. Can I just ask you a question? So,
yep.
I just don't quite understand. So, do you guys actually go and execute the whole thing? So, do you find a house that's quite that's big enough to develop, or do you build it from scratch and then?
Well, yeah, we when we first started, we were doing a lot of the conversions, I suppose, but we're finding older homes, then retrofitting them, converting them, all of that sort of thing. We've since stepped away from that side of things just because it's at the end of the day, it's an inferior product. So now we're focusing more on the new builds. What that allows us to do is we can do things where we can purpose build the rooming houses so that they're going to maximize rental returns, maximize occupancy rates and all that sort of thing. So we include things like soundproofing between rooms, even just designing things in like higher ceilings, for example, makes the rooms feel a lot bigger. But most importantly, if you have that self-contained model, people will stay there for a long time, and you'll get much better returns, much better occupancy rates. The advantage of doing the new builds as well is if you're in an area that's quite saturated with converted rooming houses, if you're doing a new build in that area, you're instantly the top of the market. So so we're doing start to finish. So finding the sites for the clients, going through all the plans and permits. So I guess similar to what you were saying with your industrial projects as well. In Victoria, we're very lucky we don't have to go through as much red tape for the development side of things. So it's if you know what you're doing, it's a fairly straightforward process to get the approvals, and then developing the full rooming house from there. And then even after the development, we've got my dad actually runs a property management company, so he can manage that specializes in managing these sorts of things. So we can do end to end, I suppose.
Perfect.
Do you guarantee the tenancy as well, or how do you resource the tenants?
That's not what Super Cashflow does, but that's what my dad's business does, where they source all the tenants and stuff as well. When we're doing the upfront determination with the clients, we will factor in what kind of tenants they could expect. So, for example, if they're building near a hospital, it's logical to assume that they'll very likely get nurses or nursing students or similar if they're close to a university. So we can determine that up front.
So is that similar to NDIS, where I believe not, but I think that's probably what Ishad is contemplating also. NDIS provides, in Victoria in particular, 8% guaranteed rental yield over a period of 7 years, or 14 or 20 even at the moment.
Yeah.
So with the rooming, would you guys be managing it, but it's totally up to the owner to, find the tenants and get the rent as per the standard sort of residential tenant numbers?
I mean, it is a lot more similar to a standard residential model, but basically the property managers will find the tenants and go that way. There's no rental guarantees or anything like that, but that's because we're not government backed. So yeah.
I wouldn't have thought so.
But that being said, there's no shortage of tenants. If you're looking at, specifically in Victoria, most suburbs, you're looking at close to 30 to 40% of any suburbs single people. If you look at what percentage of single accommodation there might be rundown old units. I mean, obviously, if you get more metro, there might be newer apartments, but there tends to not be anywhere near enough accommodation suitable for single people. So in terms of like rental occupancy rates, we're averaging across the board, and this is with mostly converted old rundown properties in lower socio areas, we're averaging across the board about 90% occupancy rates.
Perfect.
So there's no shortage of this sort of thing, of people needing affordable accommodation.
Yes, I've actually come across quite a few people that have been asking for, just a room to rent. Because they haven't got income at the moment, or they're just going through a really rough patch where they've lost
100%.
So
I think what is challenging I can see here is if the company is not giving a guarantee for the rental guarantee, then in that case the management must have a proven record of when they're resourcing the tenants. Do they have the proven platform where they know, okay, this many qualified people already looking and they applying, or applications are already ready to go? By the time your construction finished, we already qualified people ready to go into the house, and that sort of
100%.
An investor will look at it.
100%. It's a good point. You don't need to qualify property management, because we've had other clients where they've gone with different property managers that aren't across this style of management, and then they're getting rents of, we might be averaging 250 for a studio in a regional area. They might get 200 if they're lucky. And then the occupancy rates might be 60% versus 90%. So it's very important to qualify the property managers. And it's a very big part of this sort of investment.
Perfect.
Cool.
Thank you. Right. Any more questions from anyone? Not at this stage. Okay, great. I guess, Stuart, anyone, I'm sure there's going to be more in-depth questions from a few investor clients that I'll be sending to you. So
Yeah, awesome.
Yes, we will share your details with them. But thank you so much for that insight. And
no, good. It's very brief. Look, if you do want to reach out to me, I'll just quickly say, or just check out our website, supercashflow.com.au. If you want any further details, just have a chat with Romana. We'll go from there. But we do have current projects or packages where the plans and permits are ready to go, available.
Mm-hmm.
We'll go from there.
Yeah, and the idea is to have a webinar probably just particular for you, so that you can share a bit more in detail how you do things and about the projects as well. So yes, so thank you, Stuart. We'll move on to
thanks for having me.
Vaughan, if you want to unmute yourself. So can you hear me?
Yes, hello. Hey, it's Vaughan here. So from Williams Corporation, New Zealand. Thanks, Romana. If my connection is a little bit unstable, it's because I'm in the country here in New Zealand in my lifestyle property, zooming from there. So that's the beauty of property, right? We can do it from anywhere in the world. So yeah, sorry, what was the introduction you'd like to make to me, Romana?
So yes, so we've got Vaughan here who is from New Zealand, and I bumped into him because I saw 10% guaranteed rental yield, or like return on investment rather, not rental yield, in 12 months. And I was very curious. I wanted to know how that works. And, being New Zealand, it's a different country. There's other implications with tax and whatnot. So I found out more, and, I think it's a very good investment option for people that want a return in 12 months. And I believe, Vaughan, and I'll let you talk about it, there is an option for a quarterly payout as well of that investment, correct?
Correct. So basically what we're talking about here is, who we are in New Zealand is we're the residential property developer. So in terms of the New Zealand market, we are almost there to be the second largest home builder in the country by consent. And this is really born out of the need for infill development in New Zealand. What we have is we have an undersupply of housing here. They're really old houses on great pieces of land in central areas in New Zealand. Take, for example, Auckland, fantastic city, tied up in these 1,200 square metre sites. So these 1920s, 1930s homes that are just falling to bits. And people are still renting them, but the fundamentals are there's great land underneath, because that's where we know the value lies in property. So we go in, we bowl over the old homes, we acquire the land, and we build brand new turnkey townhouses. So they're fee simple, they're off the plans, and we deliver them quickest in the industry. We delivered just recently a 33 home development in Riccarton and Christchurch in 4.5 months. And the reason why we can do this is because we have fantastic designs, 12 variations on a theme, modern claddings, low risk building, like the building envelope. We don't use eaves, or we use eaves and soffites to make sure that there's this fantastic product that's in front of our investors, and it's a warm, dry, affordable home for Kiwis. Now, because we've got so big in New Zealand, it's because of the crisis. We have a massive crisis here in terms of that, like I said, undersupply of housing. It's going to take us another 10 years to get on top of it. And there's a lot of factors that have played into that, macroeconomic stuff, as well as just the councils particularly are really slow and difficult. You probably have this in Australia as well. But with Williams Corporation, I took a different take on things and said, okay, well, how can we make this work? How can we provide a housing supply for Kiwis that is affordable to live in, affordable to maintain, and affordable to eventually purchase? And we're doing that in massive amounts. So that's us. Who I am is I'm part of the team there, and I work on land acquisition, property sales, and our fund, which is what Romana was referring to, our 10% capital fund. So this capital fund is born out of the fact that, like I said, we have too much work. We have, like I said, we're going to be the second biggest home builder in the country, and by consent in a couple of months. And what this means is there's just so much land in New Zealand to develop in this format, and therefore when we've got so much business, it's not hard for us to get the land because we go and pay good market value for it. We've got people like me looking every day. We've got fantastic and
Vaughan, we've lost you
as well. That whole side of our business is fantastic. So we basically need. Oh no, you lost me, have you?
Are you back? You're back. It's so good.
I'm back. Okay, good. I'll slow down. I'll stop talking so fast. Maybe that's burning it out. But what we have here in New Zealand is this, need for capital, because we need, and everyone needs, businesses need funding, but we have too much business. And so the 10% capital fund's born out of that. We've got 130 million in the fund at the moment. It's delivers to, and we are subscribing to people who can purchase property in New Zealand, obviously. Number one, it's Australians, Singaporeans, and New Zealanders, all right, based on the current rules. So we have, as an example, we pay a quarterly dividend with 10% annually. So I'll just bring up and share my screen into that, just so you can have a look at the fund, a little bit about us and what we do. So there's our two directors. Sometimes we seem to be quite young in the industry. There's a lot of older people in property, and we are indeed young, but we're doing it differently. An example of one of our turnkey townhouses there, and we typically build on fee simple titles, and like I said, quite consistent designs, modern building techniques. We use claddings, cementale, brick, and things like that. So they're pretty indestructible. Our homes will sit there for the next 20 years, looking the same as when they're built. And so, long story short, as executive summary, I mean, what we're here to do really is to build centrally located homes that are affordable to buy, affordable to live in, and affordable to maintain for Kiwis. And because of this housing crisis, no one else does it, and it's tied up in that infill development. I think you need large scale capital to actually execute this properly. And we were really fortunate, I think, in the earthquakes in Christchurch. A lot of the central area of town was mowed down in that, and eventually purchased, and those blocks of land have led to an amazing amount of infill development. And we use the same in Auckland, Wellington, particular areas like the Lower Hutt, where there is just great available tranche of land to be able to develop and this infill technique. So we're governed, I guess, by Lane Eve. They're one of the largest law firms in New Zealand, and essentially, there's some happy clients. Essentially, we as a team, we have our general manager Catherine there, and our two directors Matthew and Blair, and we like to think of ourselves as a business doing things better every day. 1% every day we practice to increase and improve on our business, whether it be the sales team, whether it be the directors, whether it be the design and planning, whether it be the delivery guys and the project managers. So what we have is we have a really great recipe for delivering to our investors, and that's why the majority of our stock goes to investors. They are repeat investors with us, and then this 10% capital fund is born out of that we A, have too much work, and B, do it really, really well. So essentially we're trying to dominate the market, and doing a great job in doing so. So in regards to the fund, I mean, how we build our homes is, like I said, they're turnkey, fee simple titles, which means they have residence agreements attached to them. We go out, we broker a deal with the insurance, so that people get a effective property structure to be part of, rather than body corporates, which were found to be really clunky, and the unit titles that are associated with. So the previous development has been within those areas of intensity. So when we're trying to develop our country, we're finding that we need to have more density, and that density leads to unit titles and body corporates, and investors don't really get the bang for their buck there. So we do townhouses that are fee simple, so appreciate on the land underneath that asset on top, and they're in really central locations, so that people know that they've got tenants lining up at the door for Williams Corporation. Because of reputation in the market, providing warm, dry, affordable homes, we just have so many tenants waiting at our doors. So we build essentially in sort of as I said, 12 exterior finishes.
Vaughan, can you hear me?
Yeah. I hope I'm not being lost in translation.
No, just on that. So in terms of investment. So are you telling me there's two different types where an investor can put in the money into that fund and expect the returns, and on the other hand, actually buy the end product and enjoy the rents from that product, correct? Okay, maybe you've lost him.
That's right. That's right. So we obviously we have the full development cycle, right? So we buy the land, we sell the property, and we have the funders as well. So if anyone's obviously interested, contact me after the show, and we can discuss how that looks. In terms of the fund is accessible to, like I said, Singaporean, Australian, and New Zealanders, and qualified investors. The different countries have different requirements, and we can speak specifically on that. Essentially, what the fund is really there for and how it functions is that it's at 70% of the project value. Essentially, it comes in, it takes a deed of assignment on one of our land acquisitions, and then we sell those properties down off the plans. Once they're in, it goes to a first mortgage and then transfers when the bank comes into a second mortgage. And essentially, we can achieve a 10% return because our banks are funding us at 5%, and we give our investors 10%. And average cost of funding at 7.5 is very affordable for what we do in terms of infill development. So we make the numbers work, and I guess the big thing about the fund is that obviously it's incredibly secure. We've got 130 million in it. It's secured against all of our property. If you look down here, we have 1,049 homes. This is current standard at the moment in homes in progress, and 788 homes unconditionally sold. And in terms of the capital total is 114.6 million and has these following securities. So the deed of assignment has 6.5%, funds advance of 7.6, and 281 million total completed value for 101 pre-sale agreements. And then, like I said, people move to the first mortgage and the second mortgage when the bank comes in. Across all of our capital, we're making it work for us in the kind of economy of development that we're looking at. So there's a bit of a breakdown on the fund assets. So yeah, I guess the biggest thing for me about this fund is that it's really looking at, obviously what we do as a company. So when people invest, they invest with us. But more to the point is just looking at the crisis that we have in New Zealand in housing. And I know Australia has a similar scenario, but really New Zealand is so far behind the ball. We're obviously really great at rugby and spank you guys whenever we get the chance. But the other thing with in this field is we're so behind. Our councils are lagging. There are so many inefficiencies and that land problem tied up in central areas. So what we've got the recipe for is a fantastic opportunity, and that's why we can pay our investors 10%. And it's paid quarterly, and it's we like to get to know our investors and understand what their needs are in relation to their property development. We have some private funders as well of particular developments, specific developments. And yeah, so in a nutshell, that's us, that's what we do. And I guess Williams Corporation is sort of expanding, and we are now going into Australia. We're opening up in Melbourne, Brisbane and Sydney. And the idea is that we really have done a fantastic job in New Zealand in this particular area, growing to what I said will be the second largest home builder in the country, which is not a small feat. Looking at the amount of houses, how we deliver. And I'm really proud to be part of this business, because if you think about how quickly we can deliver with a high standard of quality, there's no competitors in the market around that, in terms of number of consents and doing that regularly. So it's a real pride thing. Anyone comes, in association with our business, they know, they walk through a show home, they're fantastically, amazed at the quality and the speed at which we've done. We do the little things. We put heated toilet seats in there, and we have EV chargers and future-proof our developments. We look at all the things that our customers and investors want, and that makes us then a great product for everyone. Investors, first-time buyers, owner-occupiers, but then the fund really fuels that and enables us to continue to deliver on what we're really, really good at and what we've become fantastic at and no one else is doing. So that's a little bit about us and how we work. And then the fund, obviously, happy to take some questions in relation to that.
We do actually have some comments in the chat as well. Thanks so much, Vaughan. I think we're very close to the hour, and don't need to play the last guest speakers video too, but I'll try and address everybody's comments here before I play the video. Thanks, Vaughan, so much. And I'll obviously share your details, and people will get in touch with you. It's definitely a very good investment option where, you know, you actually getting your cash flow as well if you're concerned about waiting for a very long time for your returns to come in. So
that's right. I mean, our turnaround times are very quick. So yeah, in terms of a cash flow product as a fund, you know, quarterly dividends, and then if it's a property, we deliver within 6 to 12 months on all our residential developments. So hey, thanks, Romana.
No worries, no worries. Thank you so much. Guys, in the chat, I hope I haven't missed any questions here, but I'll try and go back in. If I can please request you to unmute to ask the question, because I wasn't sure who it's addressed to. So I've got Nomiki asked the question that was answered. Thank you, Remo. Stephen Ames, you're asking about minimum average investment amount. If you want to ask the question yourself and who it's addressed to.
I think that was related to, well, to be honest, it applies to any of them. Because they all have a similar thing. So, I mean, I'm happy to roll down the line, and if you guys want to give me each, so I get an idea of what kind of clientele you're looking for.
Remo and team want to start first with what your minimum average investment amounts are?
Yes, our minimum investment amount's 100,000.
Yep.
Stuart?
So minimum investment amounts. Look, really, we're talking about buying the land, getting and assuming you can get like an 80% LVR for a certain design, probably still looking at least 200,000 minimum cash required.
Cool.
Subject to LVR.
Mm-hmm. Vaughan? Is he there? Yeah.
Sorry. So for Australian investors, it's for the fund, it's a sophisticated or the professional investor qualifications. So in terms of that the minimum is 500k for our fund, and for Australia, for New Zealand investors, the wholesale investors are 750k. But we have another fund also in New Zealand, which is called the Partnership LP, which takes from 100k, and that's a different criteria of investor. That's the eligible investors. So it just depends on what category they fit into as a wholesaler or an eligible.
Sure. Thank you. Does that suffice, Steve?
Yeah, it just gives me a bit of a scope of the kind of people you're looking for.
Great. And okay, Edward has got a nice comment. He's saying he's loving it, and thank you. He's a total noob and soaking it all in. Thanks, Ed. All right, Jack Henderson, why are the returns so high? Aren't these still resi properties and subject to the same resi supply demand problems? Jack, who was this question addressed to? Jack? Okay. Can't hear me. Okay. Let's go to the next question. We'll probably come back to that one. Andalip, what is the resale like? You want to unmute yourself and ask in particular who that's addressed to? Okay. Can everyone actually hear me?
Yes, we can. We definitely can.
All right, they've just disappeared for a little bit. That's all good. Right.
Romana, I'm sorry, I've been muted and videoed off as well, so I apologise for that. My question was directed towards the rooming house with Stu to understand about why the rental returns are so much higher.
Okay, so can you hear me? I just unmuted. So with the rental returns, so the question is why the rental return is so much higher?
Yes.
Yeah, but basically the reason for that is because the cost of development of it's a single dwelling essentially. So it's the cost of developing it isn't that much higher than a residential home. It definitely is higher because there's instead of 4 bedrooms, 3 bathrooms, there's 9 studio apartments. But there's a lot less. I guess essentially the cost versus the return. You've got 9 rental incomes versus one rental income. So if you're building in if I use a suburb as an example, an outer metro suburb in Victoria, you might be renting a 4-bedroom, 3-bathroom house for $450 return a week, versus a gross income of $2,300 a week.
I'm sorry, I
if that
missed
makes
that.
sense.
I'm sorry.
So instead of a standard home in outer metro Victoria, you might get $450 a week for a 4-bedroom, 3-bathroom family home. But for one of our rooming houses, because you've got 9 incomes, you've got $2,300 gross income a week.
Thank you, Stuart. That sounds extraordinary.
Yep, definitely.
Thanks for the question also, Jack. Arman, you're having wine again, I see.
Yeah, I'm a bit bored actually.
All right, you actually said, I love the term warm, dry, affordable homes, and don't have a clue what warm, dry means, but sounds great. That's a question for Vaughan, I think.
Thanks.
Warm, dry, affordable. Well, you know, there's
I know what affordable
there's a few
means.
things
That's
with Williams
fine.
Corporation.
We can't hear you, Vaughan, sorry.
I didn't know this was going to be sort of like a bit of a
Yeah, you understand what warm, dry, affordable means in terms of the context of New Zealand.
Spiel from everyone. So if I knew, I would have sort of been prepared for it a bit better.
That's all right. That's all right, Arman.
To be honest with you, I think people want to know. People want to gain some, me included, you know, to gain some knowledge, and it's been brilliant. But I think, you know, 10 minutes of being like it's you know, it should be like a short, sharp. Hey, 5 minutes, bang. You know, if you want to get in touch with Vaughan about New Zealand, I love what you do, by the way. I think you're gonna kill it here in Australia if you can work with those timelines, Vaughan. I do development here as well, so it's fantastic. If you can turn around something in the same time that you do in New Zealand, I'm following you through and through. The other guys, the Stu, again, specialised, fantastic. You know, obviously you need a bit more capital in because of the LVRs. I get that. And the other guys did an amazing job. I just wonder why it's Queensland and CO, I think. Why just Queensland and the sort of New South Wales, and those per square metre rates seem really high compared to what you're getting in Melbourne in those sort of infill sites.
Yeah, Arman, you're right. They are pretty high. The reason for it is we're seeing a lot of people leaving Sydney because of all these lockdowns and moving up to the Central Coast, Newcastle, Nelson Bay, and a lot of people are actually getting out and moving up to Queensland. There's a extremely high demand and a very, very little supply of light industrial units, ranging from about 50, which is like a shoebox car park space, up to about 250 square meters. The market typically really provides for 500 square meters up. So we're seeing a huge gap in the market, which is typically why we focus on 400 square meters and less. The reason why we typically focusing on New South Wales and Queensland is because, we're based in New South Wales and Queensland. That's pretty much it. So I can develop anywhere in New South Wales and Queensland, and I know I've got feet and eyes on the ground. I don't have that in Melbourne. So that's the only reason why, mate.
Come to me for that.
Well, mate, I'm more than happy to sit down and have a chat with you so I can grab your information from Romana. I'm more than keen to, see what we can do together.
We'll collaborate. Don't worry about that.
That's it. Definitely.
more coming. All right. I'm very cautious about, it's already an hour, but if you guys are okay, I'd like to still play Lauren's video because she's talking all about international investment. Before I do that, I've got a few more comments here from V. V is saying, was hoping for a lifestyle horse.
No, I'm just saying, Romana, I was just kidding because I know that New Zealand is famous for lifestyle property. I thought I'd just break the ice a bit, you know what I mean? Because we're just concentrating on property, and like I invest in lifestyle property as well, and I know New Zealand is one of the best where we have racing horses. They're all from New Zealand, You know what I mean? So that's why I was just trying to break the ice a bit. Something.
No,
I like it.
I know you love
I
your
like it.
process, V.
Great presentation, by the way, everyone, spot on. And I think it's kind of very diverse today. So yeah, so
Great.
Armand, I'm joining you with the wine soon. Yeah, so yeah, enjoy the theme. So thank you. Yeah,
Thanks, V. Thanks, V.
problem.
Yeah, so Andalip was not able to unmute himself. So the question was actually for Stuart. He was asking why hold on, I have to go back into the chat. What is the resale like? He's asking you.
That's a very good question. We've never had any of our clients that have built, they've never ended up selling a completed rooming house. The reason being is that the cash flow has been too high for them to want to let go of it. So we've even had times where we've intended to build to then resell on a commercial basis with the assumption there'd be X amount of profit built into it just from a commercial valuation, but then they ended up holding on to the rooming house. So I can't answer that, to be honest.
That's all right. But Nomiki is also asking, that's one title with those studios in there, and how many levels are we talking?
With most of our developments are only single levels. So we're aiming to build on, when I say larger blocks, I'd say like 650 plus is preferred from what we're doing. But so most of our developments only single level. We've got a few double story developments as well.
Mm-hmm. Okay.
But it's all pretty much like standard. If you looked at the outside of what we're doing, it looked like a standard residential home. So we're building in that sort of areas. So yeah.
Okay, great. Thank you. All right, guys. Okay. Harry is saying it will be in Waikato. I think that's a joke. And then he's saying very difficult obtaining finance with accommodation. He's asking.
In terms of the accommodation, we're obtaining finance. It does depend on what sort of designs. So if you're going more of the 9-studio design, it definitely is a much more difficult thing to get finance for, because the bank will look at, well, if we default on the loan, even though it's impossible to default on the loan because you're making more income than your outgoings, but if you need to sell, they think, oh, no one's selling them, no one wants to buy them, basically. So yeah, it is a difficult part of it. We are working with brokers, and we can navigate around that to a degree, but it's still, and it depends on the design. If you do something where it's more of a shared rooming house, so 9 bedrooms, 3 bathrooms, you can present that to the bank as a family home and get 80% LVR. But of course, a lot of people aren't interested in that sort of product because it's a shared rooming house.
Just with the LVRs, are they 60 or 50%, Stu?
It depends on valuation. Again, so like in some areas, if it's regional, it's 50%. If you're more metro, 60% or even 70%. We did one in Seaford last year. They got 70%. So I saw another question come up as well. What areas work well?
Yes.
In metro? Is that metro? I have to find the comment again.
It's saying, is it just metro locations for rooming houses that will work? Sean is asking.
If anything, the regional areas, you'll get a much better yield because the cost of land is a hell of a lot less. But the rents that you'll get per studios, you might get $250 in a regional market per studio versus $280 in a metro market. Of course, if you go more metro, you get much more. If anything, the regional areas are probably better from a cash flow perspective.
Okay, great. Thank you so much. Guys, we are actually already over time, but I'd really like to play Lauren's video because I think that is very different to what everyone else has presented so far, if that's okay. This is, can everyone, okay, hold on a second, sorry. I need to share my screen, don't I? Okay, share. And that's Lauren for you. Can everyone see? To you, I'll send the details out to anyone that will be interested. 1 second, sorry. It has to start here. Perfect. Perfect.
Awesome. So welcome, Lauren. Lauren Cohen from Esquire is based in the US, and she is an international legal and real estate expert, telling you all about the pros and cons about investing overseas, not in Australia, and why that is so lucrative at the moment. Lauren, I'll pass on to you if you want to introduce yourself and tell us all about the good stuff that international investment has.
Sure, thank you. Hi, everybody. I'm originally from Canada, another Commonwealth country, and I'm still a licensed lawyer there, and I'm also a licensed lawyer in the US. And I am a realtor as well. That's actually how I know Rumana from EXP. And my specialty is helping you, people, individuals and business owners, invest across borders and potentially achieve immigration status through real estate investment. I've actually worked with a lot of Australian investors over time that were managing different property management portfolios and setting up their own and getting visas as a part of that process. So sometimes they would develop a business where they would manage other people's investments, and sometimes they would be their own, and sometimes a combination thereof. So my signature program is called How to Immigrate Through Real Estate. And I specialize in helping you find alternative strategies for real estate investing in other countries, not just your own. So I work globally, mainly in the US and Canada, but globally as well. And we have deals going on literally in 18 countries and adding every single day. So it's kind of exciting. I have a couple of deals going on now in Costa Rica and in Mexico, and all over the US and Canada, and places in Canada that I never even heard of, and I'm from Canada. Somebody asked me for a city the other day in Mississippi, and I was like, Mississippi is a really long word. The name of this city, I don't remember it. It was as long as Mississippi. So I was like, okay, let's see if I can find you a realtor that can help you there. So that's what I do. I help you create strategies. But the key is that it's not just about investing in real estate, because everybody can invest. It's about creating a strategy to achieve your short and long-term goals in that investment process. And that's what I'm all about.
Perfect, perfect. So Lauren, the type of clients you work with, are they trying to find their retirement home? Are they really trying to get cash flow or looking at capital growth, or they're just really avoiding the high purchase prices in Australia when they go overseas? What are the typical scenarios?
So I work with a lot of Canadians because I am Canadian, and like Australians, Canadians are trying to avoid the tenant-friendly, high-priced real estate investment options in Canada. In the US, in many states, the state rules and regulations and laws are much more landlord-friendly. So that's better for you as a real estate investor if you're going to buy and hold. So I don't only work with people that are trying to avoid high pricing in their home country, because sometimes we look in their home country or their own backyard, but I work with people that are creating a strategy for short and long-term wealth. Sometimes you're buying an investment property just for, a second home, especially here in Florida. That's a very popular destination for Canadians and everybody for that matter. I work with a lot of Brits that are moving to Florida or setting up a second home here. And nowadays, because of COVID, everybody wants to have another place to go. If lockdown happens again, which seems to be very likely. I just went through COVID. I don't know if you know that, Rumana, but I'm vaccinated and I went through COVID. So don't think that you're safe, because you're not. And I'm extraordinarily careful. And yet I just went through it, and my throat, whenever I talk for a long time, and I apologize, it's happening now, it gets very scratchy, and there's nothing I can do except just work through it and deal with it. So it's not fun. But COVID has opened, pardon?
Part of life now.
It is. COVID has opened doors that weren't open before, because I think that we've all realized that the world is really small. And people are now much more willing to invest across borders, which is the name of my podcast, Investing Across Borders, than they were before. Because investing in your own backyard isn't nearly as appealing, because you don't, if you're on lockdown, you want to have a place to go, not just down the street or whatever the case may be. So it's a matter of kind of opening your eyes and thinking more globally and dealing with real estate investment as a global opportunity, not just a local opportunity. And I think that's true for us as realtors as well, because real estate is no longer a local business, it's a global business.
Yeah, I couldn't agree more, Lauren. And I guess in my last webinar, we talked about the Australian mindset, and a lot of people are actually, their own saboteurs, because they would probably just invest down the road of where they live. They don't even go beyond the state in Australia, and that mindset really limits them to a lot, to be honest. And I mean, who wouldn't want an overseas home in Florida or somewhere nice? At the moment, as you said, COVID is putting a hold on a lot of things. But what we'd like to know is I know rental yields will be very different in different states and in countries, but on a general note, why is it lucrative to buy overseas compared to, say, let's just take Australia, for instance. So if I was to buy a home in Queensland, which is also nice, to go to, weather is better and prices are cheaper than Melbourne, for instance, comparing a home to Florida, I mean, what are the risks involved as well? We'd like to know. If I buy in Australia, we know how to do that. There is conveyance involved, there's possibly accountants involved, and it's pretty easy a process. But if I was to look at, say, immigration and eventually have the ability to also live in the US, what are the steps, or what do we need to, who do we need to call and contact to get that happening?
Right. Well, I think the best thing would probably be for your tribe to come to one of my webinars on how to immigrate through real estate. I've created the 10 steps to immigrate through real estate. And those, if we follow those 10 steps, you'll basically, there's no guarantee, of course, but basically you'll get a visa. You'll be able to live and work in the US, come and go as you please, be in Australia if you wish, be wherever you want. There's no obligation until you have a green card to have residency, and it gives you options and flexibility. Now, to me, what real estate investing does more than anything else is open doors and gives you options and flexibility. And these days, that's what people want. Why in the US is it better? It's not. So the reality is, first of all, realtors are able to invest in real estate in the US, whereas in Canada, there's restrictions on realtors investing in real estate. I don't know about Australia, but there are restrictions on investing in real estate if you're a realtor, because they think that you're usurping your client's opportunity. Then in the US, the floodgates are open. There are opportunities ranging from as low as $15,000 for a small single family home. Right, it's crazy. To, 10 million. Now, you're not going to buy a $10 million home usually to buy and rent it out, but I have a client, and we've just put an offer in on a property in Orlando that's a 9-bedroom home that rents out for over $2,000 a night. Okay, so the price point is high, but you're looking at Orlando where there's demand for people to go because of Disney and or Universal, Disney mainly. I'm a Disney fan. But it's all about that piece about what's the ROI, what's the return on your investment? Because in Ohio, you're going to buy a property for $15,000, but you're not going to rent it for $2,000 a night. Exactly. And maybe you need to buy and fix, and then fix and flip, or whatever your desired goals are. But the beauty of investing in the U.S. market is that there is just so much volume and so much opportunity. Yeah. And doors are really open to real estate investing and welcoming. And that's a big distinction that I see, especially between Canada and the US, because in Canada, price points make it almost impossible to make money doing real estate investing. And then you're not going to have the cap rate high enough to really make it viable. And then with all of the taxes, that sets you back, so there's a lot of opportunities.
Okay, well, that sounds really awesome. So what we need to do is send clients to you for more information on that part. But I'd definitely like to know more. I wouldn't mind a holiday home in the US.
Can I just add something quickly here, Rumana?
How long?
Sure, go on.
Yeah. So I think this is a very interesting topic, investing overseas, because I also invest overseas. But I think what we have to understand is different markets have got different dynamics. So for someone to invest overseas now, they need to understand that it's very intricate investment, because you have to understand first the finance aspect of it, secondly the tax implication of it, and thirdly your interest in it. You know what I mean? Because investment in different countries have got different legalities of it. So it is something positive, yes, to look at the bigger picture, because I also invest from Mauritius. So we've got lifestyle properties in Mauritius, which is, you know, probably #1 in the world. But having said that, we just have to be mindful of, you know, of all the legalities of it. So it's very complex. Sorry about my
Yeah,
phone.
it definitely is.
Yeah.
And Lauren is actually a lawyer as well, so she deals with the whole legality side of things too, which is why.
Yeah, so just something that I just wanted to add there, but that's very, very interesting, and thank you kindly for bringing, you know, such diverse investment strategy today. So thank you kindly, Lauren. Thanks.
No worries. Thank you so much for the question as well. I'll just finish playing this, guys, and then we'll be off. I know we've run over time, but thanks for the question, V.
Is roughly a process? Does that depend on where the person's buying and what type of visa they want?
Absolutely. So most of the time, if they're going to be using real estate to qualify for a visa, it's going to be what's called an E2 visa, which is based on investment. And the process itself takes about 3 months, but we have to find the investment. We have to find the business. Okay. Sometimes it may not be that you use your real estate as the basis for the investment. We may find a real estate, a property management franchise. We may invest in a completely different business, maybe set up a cafe, but you can include real estate investing as part of your business model so that it's all covered by the visa. So the biggest challenge in the past couple of years, sadly, is that we've been dealing with COVID. So a lot of the consulates, including, I believe, the Australian consulate, certainly the Canadian consulate, have been closed for long periods of time. So what has that caused? A huge backlog in terms of processing. So even if we have everything ready, you can't process your case until you go to the consulate. Now, if you're in the US, there is something called the change of status, which is available. And the change of status can be as quick as 15 days, believe it or not, that they make a decision. But there are restrictions on that because it's not a full-fledged visa. However, for a lot of my clients that just want to avoid lockdown or avoid winter, that's a great option for them. If the Canadian consulate or any consulate closes down again, what usually happens is some of the other consulates open their doors to residents of those countries because they're not able to process in their home country. That's what happened. Mexico opened its doors to many countries, for example, during the last lockdown, and processed cases for lots of clients that weren't Mexican.
Okay.
So.
Okay. Right. So basically, you having a legal background as well, you'll be helping the clients through the whole process, right?
Right.
Helping them, and also what type of investment or where to buy. That whole process will be taken care of by the team as well. I suppose.
Well, it really depends on what the client wants and needs. So some clients come to me and they already have an investment portfolio in process, and I help them transition that into something that will qualify for a visa. Some clients come and say, I don't know, where do I want to invest? And then we have to do an analysis and create a strategy based on their goals. Do you want multifamily? Do you want Airbnb? What are you planning to do? Do you want to buy and flip? If you're flipping, you may not qualify for a visa because that's more passive. To qualify for a visa, you need to be actively involved in running a business. Okay, so it's all about, again, back to that word, my single favorite word, strategy, and making sure that you find a team that has a trusted advisor at the helm that can manage and walk you through the whole process, not just for the investment, but with the goal that you want the investment to achieve. So in other words, you're not going to buy 6 single family homes and qualify for a visa, no matter what cost they are, generally, because that can be a very passive investment.
Okay.
But you may qualify at 10, or you may qualify at 4 if you're splitting them up and doing Airbnb. It's all about figuring out the strategy and the goals that make sense for you.
Okay, no, interesting. That makes total sense. All right, and how do you work with, say, local agents in Australia or wherever the clients come from? Is there a connect, or is that a purely client and ESQ relationship?
I'm not quite following, but
Yeah.
usually if you're referring the client to me, you can be as involved as you wish, depending on the scope of what you want to do and how involved you want to be honest with you.
Oh, sorry.
What's your relationship?
I'm not quite following, but
Yeah.
usually
Sorry,
if you're referring the client to me, you can be as involved as you wish, depending on the scope of what you want to do and how involved you want to be honest with you.
Perfect. No, that's good. All right. Well, I guess for more details, we'll bug you, Lauren, along the way. But very, very good tips here, and definitely a very good investment option for clients in Australia. To reach out to you, I'll send the details out to anyone that will be interested.
Excellent. Well, thank you very much. It's been a pleasure. Take good
No
care.
worries. Thank you so much.
everybody.
Bye.
All right, guys. That was Lauren. Thank you so much. And yes, sorry guys, we've actually a bit over the line, but is there any questions around the international investment from anybody? No. That's all good, son. All right, cool. I guess we all want to go and enjoy our evening today, but thank you everybody that tuned in. And Vaughan, Stuart, and the team from Remo had to leave, unfortunately, but thanks so much for being here and giving all the insights to the listeners, and we'll be in touch. Thanks, everybody.
Awesome. Thanks, Romana.
Thanks.
Thank you, everyone. Thank you, everyone. Take care.
Bye.
Much appreciated. Well done.
Thanks, Fee. Bye.
Done, Romana.
Thank you.
Bye
Well
for
done.
now. Bye.